Gosh, can you all hear me? Thank you so much. Thank you so much for joining me tonight. I'm so sorry about that. Let me tell you something funny. I've actually been speaking for 15 minutes to myself. Oh my man, this is crazy. I'm so angry right now. So I'm gonna play music for another 1 minute. All right. So I'll join you just now. We're gonna talk about a lot. But so far, look at this question that I've got here posted. Let me know what you're all about. Which price action system have you traded before? You understand? This is no indicator. This could be anything from support and resistance, the Elliott wave theorems, the Fibonacci trading systems, your harmonic trading, any sort of trading system that just didn't include an indicator and was very price action based. Your triple bottoms, trading patterns, those type of stuff. So just let me know in the comments below, what are you all about? All right. So let me go stop alone. Um, just just thinking about the past 15 minutes that yeah, I'll be back. All right, so I'm over it. I'm over it. So we've got some responses. Let's see what you guys have to say. We've got support and resistance there. Another one for support and resistance. We've got supply and demand. Fibonacci. Keep them coming. Keep them coming. I want to see how far you guys have taken yourselves. Keep them coming. All right, so while you're doing that, I want to tell you a proper story, one that I've told before. So deja vu, deja vu. I want to encourage everyone to keep learning. You know, you can never learn enough. I've been in the industry for 6 years, and There are forex traders being born every single minute. You understand? And some of these guys have been here for quite some time. And we all trying to do the same thing, is to try and build an understanding of a trading system. All right. Which in essence, if you drive down to the core, it's understanding yourself. You understand? Because for you to understand that system, you're going to go through emotions. You're going to go through tests. You're going to go through great times where you get great reward. You're going to go through the whole shebang, the whole thing. And all we're seeking is to get to a point where we are comfortable with the way we are trading and we're comfortable with anything that come our way. That's how you become a winner. That is how you win. That patience, you learn that. You don't just come to the market and you automatically know that as soon as I see $10, I'm going to walk away. Someone has a completely different concept of that. Someone understands that they can pull out $100 from a $10 risk. And they have the patience, they have the experience, the XP, baby, to take it through and walk through that whole journey. So I want you to take it personal, make it your own, make it your own thing. Each and every strategy that I teach works, and each and every strategy that we teach doesn't work. What makes it work is you, your attitude, the way you handle risk. How devoted are you to coming out with a winner? It's all about that. So yeah, guys, I want those crazy systems. Let me know, what crazy systems have I not heard about? Because support and resistance has been there when I started. And I started in 2014. My mentor probably started in the 2007s. And support resistance, Fibonacci, and all this stuff has been there. I think I've learned all about it. So yeah, interestingly enough, I haven't learned anything in a long time. But yesterday, after teaching 2 days in a row, I felt like, hey, you know what? What are other people speaking about out there? So I came across this thing, order blocks. It's this concept called order blocks. Let me type it down for you. All right, order blocks. You guys know about order blocks? Because I'm a definite newbie there, but looking at the concept, I understood exactly what this is all about. Huh? So it's apparently a theorem taught by, is it a person? ICT? Maybe let's Google it. Let me give credits where they are due. So I want to dive into it. I want to give you guys homework. Let's switch accounts. No ads here, baby. No ads here. So is ITC order? Oh, it's ICTist. The inner circle trader. Those thumbnails, my man. Those thumbnails. They don't look nice. All right, so there's a bunch of videos on it. You guys can go watch it. But what I want to do is give you my understanding of what I've seen here, and I want you to go practice this. And I want you to tell me, what do you think? Do you think this is a concept that actually makes sense, that has a good risk to reward ratio? So I'm as clueless as you, but I want to show you, and I want to take you through a journey of how do I get to a point of purely understanding the strategy for what it is. Even though I just learned this yesterday and I watched like three videos on it, and all three people had their own concepts and understanding over it. But apparently, each and everyone is giving it's giving um, ICT credits to the whole system. All right, so I'll do the exact same thing. All right, so let's go look at it. So the whole order block thing is about looking at a market that's trending in a certain direction. I think I'm very good with illustrations. My drawings suck, and you guys don't tell me. I'm gonna quit Forex. All right. So it's all about looking for a market that's actually moving impulsively, moving in one direction for a long time. And it's very good for day traders as well. So I'm gonna be teaching you the same strategy from a day trader's perspective, and they do it over multiple time frames. Okay, so they want to be extra sure. So if you want to go deep into it, you can. But I'm gonna just show you the surface of understanding what the whole strategy is about. So, day traders, this is your strategy. What does a day trader mean? This guy trades every day when the market is open. All right, so you are basically a scalper slash day trader. So that's for you guys. So time frame that we're going to be using here is 15 minutes. So we're looking for markets that are moving in one direction aggressively and then giving us like a good pullback. You know what I'm saying? But the whole order block thing is about finding where the market turned. So you could imagine that up here where the market turned, you'd have candle action to represent that, like so. Let me maybe zoom in. Okay. And you'd also have another candle over here. And the story goes on. But as soon as this market changed direction, there was obviously a red candle that moved this way to show that now we're moving down. So as soon as this happened, this last bullish candle, because this was a bull direction here, so it's going up. So the last bullish candle here becomes our order block. Okay. Are you guys with me? I don't want to go too fast and just leave you all behind. Okay. So say the market keeps going down from here on, boom, 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 and it then decides to go back up like so. So the same thing applies to the bottom end. So obviously you still have all these candles, all these bearish candles that are coming in like so. And then the market switches on us and then it starts moving up from there. And the story goes on. But the last candle again, we take the body of that candle like so and so. And this is also an order block. All right. So they like literally took supply and demand and redefined it for me. So they gave me an extra edge on it, which is a concept I understood, but I felt like was also kind of stupid sometimes. Um, but after hearing about order blocks, it makes a lot more sense to me. So what's it all about? So what we're anticipating is that the market will keep moving up from this point, come to this order block, and literally not more than 50% of that order block, it should turn from there. And then it'll move to the next order block. And the same thing will happen from there. And obviously, you're going to have breakouts. You're going to have order blocks that are going to fail you. Because otherwise, this market will just keep moving sideways forever. Okay? But the concept is that you're going to win a lot more than you'll ever lose. Why is this? So, from what I've seen, the risk to reward ratio. All right, so you have a candle here that closed like this. You are literally risking this much to go and make more than 5 times that. So even if you lose a few times in a row, when you do take that win, it's going to take you far. All right, so let's go look at it. You know, I'm a strategy tester guy. All this talking kind of gets me tired. Okay, maybe we should take a few examples before we run the test. All right, so let's look at a few examples of where order blocks could be. So yeah, not enough history, but I'll use what I can. So here we see a market that's moved all the way up with a few resistances over there. So this here would be an order block. Let me just quickly customize my Fibonacci so we get the best out of this. Two, almost to two. But 50. Five. Don't know what I'm doing. Speak up. A block. Order block. So yeah, this is the Fibonacci. I'm just playing around with it so it gives me certain information or measurements that I'm looking for in the market. All right, so the market was pushing nicely here. 1, 2, 3 candles were pushing up, and everything was going jolly until there's 2 black candles came across, showing that they have to retrace. So this movement here is what we would call finding a resistance. So as soon as a resistance comes by, we take the last candle to create a sort of a trend or an impulsive movement, a one-directional movement, and we call that the order block. So this is this pink area that I've got highlighted here. So the concept is to take the body of the candle, you know, the candle body, not the tails, not the wicks. shadows, or I don't know what other names are out there, but you get me. All right. So this here, from where it opened to where it closed, this whole area here becomes the order block zone. Okay. So it goes it goes down, then it moves up from there, breaking that previous order block. And what you see is that just on top of that order block, that's where the market touches and goes. So according to the theory, they shouldn't go beneath the other 50%. So here, which is halfway. Everything should happen within this region. So meaning that your stop loss should be up below the candle that's called the order block candle. And so that's the theory around it. So let's keep this order block here. So even if it doesn't work here immediately, the whole concept is for it to work in the future as well. Okay, so in this case, it worked here, it moved up. Let's look at the next order block. You had 3 candles moving up here. Let's see if the order block applies here as well. So this is the last bullish candle. So what you see, there's the market is respecting the order block. They're staying within that order block. And then finally, they break out of that order block and start moving up. So we're expecting that they'll come back at some point, test the order block, and we could make some money through that. So that never really happened. Okay, so let's keep going with the story. It keeps moving up, keeps going up, keeps going up. Finally, here's a nice big one before a retracement. So this as well becomes an order block. All right, so we go below the order block, meaning this black candle here can also be a mini order block for itself. Let's make him blue. There we go. So what you'll notice is the order block was used here. Right over there. Right? Because in the sequence of this thing moving down from here to there, we created an order block where now an up sequence also started. So we have an order block up here as well. All right, so I'm basically focusing on the bigger order blocks for now. All right, but I just want to show you how it worked there. So they came and retraced, touched this order block, and then the market quickly shied away from that. So literally, if you had a trade on this order block, it would have activated, your stop loss would have been down here or below the wick here, and you would have made more than 2 times whatever risk was in here. You know, talk about sniper entries. All right, so this is a scalping strategy. You're not supposed to stay in forever. From one order block to the next. All right, so let's look at the bigger order block that we're looking at. So price played in that order block for quite some time. But the final action of that order block was, in this case, right over here. So this is the last order block that ever happened. So this would be a major order block because you can just see the action that happened here all the way coming down from this point. All right, so let's reflect all the other order blocks that we have here in the market. So the market moved down from here, this whole area, this big black candle here is the last candle before last resistance or bearish candle before the market started moving up from there. So you can tell that this is a pretty huge order block by itself. So we're just going to extend that to the side like so. Take the full body of the candle. There we go. And if I add a Fibonacci to it, wrong one, Fib, where are you, buddy? All right. So the market came rushing down from this order block here, came all the way down into this blue order block here, which is basically just the last candle before the market moved up like this. So as soon as they got into there, they probably activated your trade here for a buy. your stop losses would have been beneath this order block here. And from there, the market literally moved all the way to the next order block, which is this area here. All right. When they got there, you could have taken your profit here. This could have been your first take profit right over there, because this could also be a resistance where the market would push down from. All right. Funny enough, they broke it, went all the way to give you the final TP, which is then 5 times whatever risk you took over there. So literally after hitting that take profit, they went back to that same order block. This one here. Okay. Even if I extended it from the first order block, which is this one here, let's make it pink again. After hitting that order block there, the market then started moving up again. So they used this resistance as support in this case, keeping the same order block rules applying. Okay. Are you guys seeing what I'm talking about? Let me know. Are you with me? Is this too advanced? Order blocks, supply and demand, support and resistance. We should all be in the same box right now. Are you with me? Because we're about to take an example. All right, so what I'm using here is a Fibonacci tool. It's a tool to measure waves in the market. It is not an indicator. It cannot tell me where to buy or where to sell, but it can simply measure out the market for me. All right, so remember, this whole class is about no indicators, just purely candlesticks, measuring tools like I'm using here, and some logic to it. All right, so the blocks I'm drawing here are called order blocks. If you're a supply and demand trader, you might look at it and say, "Ooh, this guy is trading supply and demand." Uh, I think you're right as well. If you're a support and resistance trader and you're also seeing that same thing, I also do. But the concept of order blocks just, I think it's good. All right, so let's take an example then. Let's draw the most current order blocks. What I want you to be aware of is my chart is divided into days. So from this vertical line here, yeah, I think you all see it, all the way to the next vertical line. This is a full day, full trading day. Okay. Why is that important? Why is this guy showing us full days and so on? All right, so I'm gonna draw a random chart. Please, please, please. Don't mind it. It's not accurate. It has nothing to do with anything. All right, but it'll get my point across. So these lines here are dividing the days. So this could be Monday, and then this is Tuesday, and so on. Okay. As a day trader, as someone that wants to hit the market on a daily basis, you have to split it down. You have to split the whole day and see the game plan for the day, right? Because not every day looks like the previous day. Okay. So this could be Monday and Tuesday, and this would be Friday here, obviously, and this would be Wednesday, and it all goes on. But during these days, if you haven't noticed this already, the days themselves are divided into time zones, or what's professionally known as time sessions, trading sessions, excuse me. So the first quarter would go to the Asian session, followed by your London session, and then your New York session would be the last one. Then the new day starts. Then again, we go Asian, London, New York, and it keeps happening like that. So between those sessions that I'm referring to, there's volatility. So when you ask yourself, when does the market start kicking off? When does it really start moving? It's during this time sessions. This is what's making the market move every day. So when the Asians open their market and close it, so the overlap between Asian and London, the open and close of that, this is where you'll see a lot of volatility in the market. Okay. Likewise, when New York opens around 2 p.m. South African time, you'll start also seeing that type of movement, right? So a lot of theories and strategies have been built just upon this. How do we catch the market when it's just about to shoot out and we just jump onto that train? And that's what they want to do. So as day traders, they wait for such things. Okay, so same thing will go for the next day and the next day and the next day. Okay, so I want to quickly show you a glimpse of that so you know what I'm talking about. And then we're going to take that knowledge or understanding and we're going to combine it with the order block trading system. Okay, now I'm going to use an indicator, a volumes indicator, and just click on volumes. All right, and then I'm just going to shrink it. Maybe let's make this histograms a bit bigger. Bit more visible. There we go. So this is USD CAD. All right. So if you look at the volume indicator and you look at every time it made a peak, you can start seeing that there's a pattern. It probably goes up twice a day or 3 times a day. So meaning there's volatility during those hours. And if you start drawing horizontal lines, you'll start noticing that it's happening almost around the same time. Okay. This is something you should be learning at the beginner's class. But to make sure that you know what I'm talking about, I'm just going to show you. So let's start here. You can see there it says 1445. Let's go again to 1445 and see what's going on in the next day. 1445 is still on the peak. Let's go again. 1445, another peak. 1445 the next day is another peak. Let me just move this comment here. Sorry about that. So all the peaks I'm referring to are here, happening at the exact same time every day. So the ones I'm showing you now are all the New York ones. What's happening during the New York session? So if you go to the next day, 1445. So we usually start at 2 p.m. to catch this because of the time difference. 1445, another peak. So now this is obvious that this will happen every day, forever. Around those times, it'll happen. There's an earlier time as well where you can see the earlier peaks that are happening. Maybe I should just change the color there. Blue. Looks ugly. So let's start from this guy here. So here's a peak. This happened at, it says here, 3:30. Okay. Let's go to 3:30 again. 3:30 is another peak. So you can go prove this yourself as well. Use the volume indicator and you'll see volumes happen around the same time. And the reason this is happening is what I've just taught you right now. is the time sessions. The Asian session, the New York session, and the London session. They all happen at the same time. And if you just Google it and say, what time is London session in my local time, you will find the time. All right. So currently, you wake up at 7 to catch London, which is only going to happen at 9, but you need to set up beforehand. For New York, you're going to start setting up at 2 p.m., whereby the market will only start kicking off around 2:30. All right. So keep that in mind. As we're trading, if the market doesn't go my way, I'm going to use this knowledge. You understand? If let's say I trade early in the morning and the London session smacks me, what I know is that the New York session might continue or reverse that market. So that means I've got a second trade that can come in. So I plan well in advance. So let's give it a try. Delete. I don't need those because I know it's gonna happen anyway. It's the nature of the market. All right, so I want to draw in as we start this brand new day here. We literally just a few minutes into it. I want to draw all the previous, what do you call this, order blocks into my chart. All right, so here's the lowest one I could find from the previous day. Let's find the highest one also. This would be the highest one right over here. There'd also be another one here. It's not as important anymore because it's been broken, but it could literally help us enter this market. There's also one down here as this market was pushing down. This became a whole order block, embodied by a smaller order block right over here. Then we can see that this order block was used here. All right. So all the order blocks that are below price, I'm going to make them blue. This is to show that they acting as a support for now. All right. This came down, then the market moved up. So one could argue that this little guy here is also an order block. Okay, not bad. So now let's watch price and see what it does. So we're very close to that pink order block. All right, looks like we're breaking it. Let's see how price closes. Closes above it. All right, so in this case, this was supposed to act as a resistance. It's supposed to help us push the price down from here. That's what I was expecting. Okay. So with my expectations, I'm going to put a sell order here. Just in case they come down. So the reason I did that is because I'm already above the order block and I know it should do something to push the price down. So what I'm hoping for is that they can catch me on their way down, okay, and leave me out of it if they're moving up. So they took my order there. I'm going to leave it in. As you guys know, I'm a big counter trend trader, so I love holding trades. All right, so since there's an order block above me, that's the last order block I'm going to use, and I might even use a stop loss in that area. So let's just see how it goes. All right, very close to that order block. I might as well just set up for it. I'll take another 0.010 here. Get it going. All right. So obviously, I want to go from the pink area to the blue area, and that's where I'll take my profit. I just have to be patient. All right. Or take my stop loss. Ooh, looks like they're using it as a support there, eh? Not good. Not good. All right. So we just activated the second order from the highest order block. I should kind of set up a stop loss for this. Let me do that quickly. So I'm going to put a buy order here. It's my stop loss. All right. So it's almost that time. It's almost the next session. Let me see if I can get the volumes showing here. So when the session kicks in, you'll see the volatility. Like the market will automatically feel different. And you just have to mark that time and you'll see it happens every day. Oh, the suspense is killing me. All right, all right. I can't take it anymore. A bit more speed. A bit more. All right, if you look at the volumes here, it looks like they're picking up. So we're about to see those moves we've been waiting for. It's either we dead wrong or dead right. So the volumes don't show you direction. They just show you that there's now new movement. There's buyers, there's sellers in the market. It's busy. It's busy now. All right, so it looks like the market is stuck between those two other blocks, and yeah, they're taking out the buy one. There we go. So we would have hit stop loss in this other block. Let's now set up again. It's not over. All right, so there's a new order block here. All right, let's see how the trades are going now. Okay, so we're currently running 2 trades. Collectively, they are losing us $17. So we're gonna kill them. So because we hit the buy order up here, this was technically our stop loss. So it means we would have lost that trade. So we need to recover the $17. Okay, it's not forgotten. Before the end of the day, before we hit this line here, I want to make back that money. Okay, so let's update our order blocks here. So here's a full order block. All right, brand new one over there. We'll just have to see where they take it. So this should also be pink. As it could be a resistance until further notice. All right, so this one is now too old. Our new guy would be this guy right over here. Actually, we start with this guy down here. So now I'm counting on the US session to come in and save my butt before the end of the day. That's if I have any chance of making profit in this day. Okay, since we're still within a major thingy. I'm gonna wait for it. But we've went below this one again, so we might come up to use it as a thingy. But they've already used it here, and they're moving down nicely. Okay, let me give them some time. Let's see a few more candles. All right, so as they move towards this order block, I'm gonna give it a trade. I'm gonna go into the 0.20 now. Buy limit. All right, so I'll take stop loss beneath that area if need be. All right, so they touched it. Looks like they're leaving. They back to that pink area. It pushes them back down. So it's a huge fight between those two order blocks. But I'm gonna hold my own. I'm gonna hold my own. Looks like they go in beneath this order block as well. So I'm gonna catch them on the next one. There they go. Snap, that was too quick for me. Buy limit. Let's go. I've got tons of blue, man. Just increase the speed a bit. Just taking forever. All right, so it looks like they reacted well from this order block. Let's see if they'll make it past this pink huge one or if they'll come for us. All right, so this is the volatility from the New York session. My ass saver. All right, so I've made $34. So I've recovered the loss, that's $17, and I've made the profit in the same day using 2 sessions, London, New York, baby. All right. So those of you who don't know, we host the New York and London sessions. We call them the pip ovens. This is where we look at the market like this, baby. Not to be right, but to try and walk away with money before the end of that day. So $16 for someone that has $100 account is not a bad return in a day. Not at all. All right. So I hope you're enjoying this order block stuff that I have just learned to come teach you about. So I'm not truly an expert at it, but because of supply and demand rules, support and resistance rules, this is second nature. If you any of those types of traders, I think you will agree with me. All right. So this trade never got activated. That was a bit sad, but hi. So look at London. Look where it's taking the market. Crazy, eh? Crazy. Order blocks. Order blocks. Okay, let me move it a bit faster. Just keep your eye on the chart. Look at the volumes. Imagine where the order block would be, where it would fail, and where it would work. All right, so a new day has started. This is when you start drawing all the previous order blocks right here. All right, and then you wait for the next session. You'll see a big market move in it. Round about this times, should see a breakout. There we go. So that's London right there. All right. So London created its own order block as well. You must realize. So US just about to kick in. Uses London order blocks. There we go. A London order block touched. We are beneath it. Now US is moving up to the previous order block, which is in this area here with a small retracement. So it's a new day again. All right. Let me help you out a bit. So the market moved down. This is the highest point since they moved down. So this is an order block. So we will see price move around there. This is the last order block. So this is the lowest order block of the day as well. And currently, the order block that they just broke now is this huge one here, which for me is too fat to make any difference. I wouldn't want to enter anywhere near that. So I'm going to leave it like this. There's an order block also down here. So these are the ones that stick out and just stand out for me. I'm going to keep it going. So this is where you expect price to react, where you would want to take some trades. So if they touch that blue one on top, maybe I might take a sell. Touch that one, buy. It's witchcraft, this one. Yeah, so in that day, you could have hit TP twice, New York and London. What you say? All right. So I think I went well over my time. Let me see. 8 minutes. 8 minutes. Gosh. 8 minutes plus 8. That's my lucky number. I was born on the 8th of August, 0808. And it's literally 0808 right now. So let's get the hell out of here. So any questions? Let me not leave you like that. Any questions before I close this session off? I hope you really learned a lot today. And that if you take your time and you watch our videos, you yourself could learn something that you could use for your trading systems. So what do you think about order blocks? Is it something you might want to implement? Maybe you might teach me more about this than I know. While you're thinking, why don't I play music and have a drink? So what do you think? Is it something worth knowing? Is it something you already knew? Let me know down in the comments. All right. A few comments came in. Thank you so much, guys, for your time. Thank you so much. Try it out. Go see it. I could have added a lot more to it, a lot more sauce, but we haven't learned about those systems yet. And as the weeks build up, we will get to revisit this order block stuff. So if you have systems out there that you've learned about and you just don't understand them, let us pro traders help you. Just text us, guys. Go to the chat board, go to option 6, contact us, live chat, and let's start talking. Send me those charts. Let's see what you're dealing with. If it's anything good, obviously we want to put it out there. We want to change lives, and that's what we're all about. So from the Opulence team, from the Be More Forex team, and from all of us here at home, we love you. Have a great night. I am out of here. Out, out, out. 8.
Again on the track.